Hello and welcome back to the Money Control live stream. You are watching Markets with Santo and CJ. And well, the rally continues unabated. And if you look at it, Santo, FOMO is back in town. I think if you look at the Nifty and Sensex, they are set to end higher for the 7th consecutive day. And the Nifty is set to register its longest winning streak since October of 2021. But the only catch is the last time we saw a streak like the Santo, it was just before the record highs, and then we know where the market went. So yeah, I mean, the bears out there probably would be hoping that the signs are the same, but for the bulls at this point of time, everything is flowing in their favor. If you look at some of the triggers that are leading to this, clearly the buying momentum from foreign investors, the FPIs, that is one trigger, and second is the Brent oil. I mean, Brent crude oil futures fell to a 6-month low today of about 91.4 per dollar per barrel. So clearly a lot of positive signs, Santo.
Well, CJ, more than fear of missing out, it's getting to a point of frustration over neighbors' opulence. That the general feeling is that probably others are keeping
up with the Jonases, is it?
In some ways, and it's before the market peaks out, always there is this one round of very huge, very sharp run up.
Maybe a melt up.
A melt up, as they call it. But at the same time, you really can't go by past trends. Because market has behaved in a certain way in the past, you kind of extrapolate it, but that may or probably may not work, as we've all been surprised. But that said, what this upswing definitely will do, I think, is pull in a lot of fence sitters. So
and there were quite a few out there.
So probably people will start putting incremental money, is what I think. But at the same time, maybe the market needs to cool a little bit at this point in time, because otherwise, usually you've seen that when the rise is very sharp, sometimes the fall is as spectacular.
Yeah, well, Santo, I mean, your point about cooling down, in fact, reminds me, Sandeep Sabharwal, who was, ex-SBI fund manager, he tweeted out earlier today, that market right now is as overbought as it was oversold in March 2020. So that is a big comment coming from a big veteran of the market like him. So we will have to wait and see, of course, which way the market flows out. But we also have a lot of stocks that were buzzing in trade. Santo, your pick first.
Well, Apollo Tyres, the stock has been on a run over the last couple of weeks.
I know.
Almost 50% rally there. Tire stocks in general have had a poor 2022, but the run-up of the last few months seems to have more than made up for it. So for the year as a whole, I think, CJ, the stocks have given decent returns. Now, with Apollo, two big triggers here. One is that the recovery in the commercial vehicle segment, which is a major area for Apollo Tyres, and at the same time, you've got rubber prices which have been steady, and also crude prices which are now slowly coming off, or at least the expectation is that crude oil prices will continue to trend lower. So these two factors, I think, is what is drawing investors to the stock. Good performance there, and just a couple of days back, the company had said that the outlook for Europe is pretty strong, and the momentum there, specifically that's the word that they've used, is pretty good. So it looks like the outperformance in the stock could continue for some more time. CJ.
Yeah, I mean, Santo, I tried very hard to find holes in the stock, but if you look at the earnings, if you look at the price momentum, you look at the technical charts, everywhere it was very difficult for me to find any chink in this rally. And this is probably one of those stocks where you don't want to bet against the momentum at this point in time, because if you do bet against the momentum, it is very, very likely that you will end up burning your fingers. So I would probably stay away from debating against this stock at this point of time, because of course it is making a lot of money for investors. But one more stock that is actually making a lot of money in the past few weeks is Zee Entertainment. The stock has seen a very sharp rebound since its quarterly earnings came out. Yes, the Q1 numbers were quite bad, and I think the market has probably moved beyond that, because the market is now focusing on what the company could do in the second half of FY23. Now, what they could do is that let's be mindful that FMCG companies are expected to benefit from the reduction in oil prices, the reduction in commodity prices. The view out there on the street is if that margin benefit comes in, then ad spends, which was the first collateral that took the hit because of the margin pressure, that could also start coming back, and that will be beneficial for a company like Zee, which depends quite heavily on advertisement sales. So I think that said, Edelweiss Securities, they are expecting big recovery in ad sales, and they believe that the stock could give quite a good return in the next 1 to 2 year time frame. So for me, I think this is one stock that could probably be again in that momentum bandwagon that Apollo Tyres belongs to.
Well, there was this big run up in the stock price sometime in October,
Yes.
September, October, the talk about the re-rating.
Yes. I mean, no, when the entire Invesco and all that fiasco was going on. Yes.
And now with Sony coming in, the stock is set for a re-rating, but market seems to be taking its time to make up its mind on Z. Besides, don't forget, CJ, a couple of things here. It continues to lose market share, that is one. Secondly, there's also the embargo on pricing of linear TV. These are the two factors which I think could weigh on sentiment on the stock for some time to come. It's been moving in a pretty much a tight range for some months.
It has been. I think that is largely because, of course, there was pressure on earnings. Although the subscription side of the business was holding on, it was the advertisement side that was suffering because of the withdrawal of promotional activity from FMCG companies. Also, let's not forget the startup space, the crypto space. Those two spaces which actually contributed a lot to the advertisement growth last year. They had all withdrawn, a lot of their activity. So now going ahead, the hope is that FMCG industry definitely will come back, and in the second half also with the festive period coming, generally you will expect that the second quarter, third quarter is where you will see a lot of advertisement activity, and therefore the fundamentals also should start looking good.
Well, next stock on a watch list is Metropolis Healthcare. CJ, a month or so back you had talk of the company
strategic investors,
bring in open strategic investors. Now that seems to be off the table for now. The Metropolis founder was on the channel some days back and said that clearly they are not looking at any minority stake sale at this point in time. Probably this could also indicate that the talks didn't actually go anywhere, or
possibly,
or they could
maybe the valuation picture, exactly, they could not come to terms.
Metropolis is confident of pulling it on its own, and they've said that they would rather go alone, and have also said that this kind of unreasonable competition that you're seeing right now, the price for that doesn't really make any change to the consumer preference. And analysts tracking the stock say that yes, the company does have some moat, especially when it comes to specialized tests. But that said, there is no escaping the competitive intensity, and that will weigh on margins. Morgan Stanley has sharply cut both earnings estimates as well as price target for Metropolis. The price target has been cut from something around 2,200 to about 1,547. EPS estimate for this year has been cut by 15%. Already, if you look at the latest margins, they are about 30% lower than what they were pre-COVID. And also, you're seeing some pressure on the top line as well. So pressure on top line, pressure on margin doesn't make for high valuation, CJ.
I think, Santo, for me, given the stock's performance and the correction that the stock has taken this year, it just seems to me that the concerns at this point of time are a bit overdone on the margin front. The stock is currently quoting at around July 2020 levels. So that is almost a 2 years worth of activity or returns been taken off the table at this point of time. And valuations have become comfortable. I'll say that because yes, the top line did suffer in the June quarter, but that was largely because the COVID tailwind that the company had, that had gone away, and now the non-COVID business is something that is coming up. Yes, it has not recovered to the pre-pandemic level, but the hope is out there that later this year you will see the non-COVID revenues coming back on par with the 2019 levels that were there before the pandemic. As far as the margin is concerned, yes, margins have shrunk from about 31% level a year ago to almost 33% level, I beg your pardon, to about 26% level right now. But if what IIFL Securities has to say is that the longer term trajectory for margins overall is around 25 to 26% for Metropolis over the next 2 to 3 years, and therefore in that sense margin performance in June quarter was actually quite resilient, given that June quarter is generally a seasonally weak quarter for the company. So for me, I think with the non-COVID business coming back to normal and probably market recalibrating expectations on the margin front, current valuations could start looking very attractive. Well, the next stock on my list is Santo, the multiplex space, which you have been quite bullish on at some point of time.
But you've been more bullish than me.
Exactly. Yeah, okay. I was quite bullish on PVR, but I have to change my views because of what is happening right now. Clearly,
fair weather friend.
Yes, always.
The prices always make the narrative, don't they?
Mr. Jhunjhunwala used to also say that, right? You have to change with the market. You can't be, if you don't change with the market, you have too much pride, and you can't have pride in this market.
Okay.
So, selling pressure today in the stock, both of them, Inox Leisure, PVR, both were down more than 2% at one point of time. Now, the reason why the sell-off is happening is because, of course, they have seen quite a lot of gains this year, so there is some merit in booking some profit. But also, the recent failure of two mega Bollywood movies Laal Singh Chaddha of Aamir Khan and Raksha Bandhan starring Akshay Kumar both have bombed on the box office over the weekend, and clearly that is not really helping out investor sentiment at this point of time. Now, my view is that Santo, the stock could remain under pressure because at this point of time, the movie pipeline going ahead does not seem so, that great. Probably we will have to wait till the festive period comes in, then you will start seeing some big star movie coming out. But the major concern for multiplex would be what is happening with Bollywood, because at this point of time, Bollywood movies have had a long string of failures, while it is only the South Indian movies that have helped companies like PVR and Inox Leisure maintain some semblance of growth.
Well, it doesn't matter as long as you're getting hit movies from either from
but
Bollywood
you are not,
or
right?
South
You will
India.
not always get South Indian movies on the pipeline, right? At that level.
Market seems to have, people in general seem to have taken a liking to South Indian movies. So all you
have
need
to
is
thank
probably
the pandemic for that.
all you need is probably just some of these South Indian movies running there. But that said, CJ, yes, the stock has had a fairly good run. Most importantly, in the June quarter, the company managed to turn corner. It's posted a profit after 9 consecutive quarters of loss. So things, I would say at this point, are looking up for PVR. And it's hard to value a company like PVR on the basis of the traditional P multiple. It's never been the case.
Interesting. Why so?
Well, all through it's not just for PVR. I mean, there are plenty of companies where the market seems to see value different from what can be captured in the earnings.
That's an interesting point.
I think you can.
I mean, a lot of people talk about enterprise value probably being in this current market, EBITDA upon enterprise or enterprise upon EBITDA actually being a better, multiple or a valuation metric than price to earnings. So maybe there is some merit in that point.
Well, and now with the merger with Inox, the market share obviously is going to improve considerably. And we have also the festive season coming up. CJ, don't forget that. So that typically results in a lot of footfalls to multiplexes.
It does, Santo, but if Bollywood keeps, putting out stinkers like this, I doubt people would turn up. That is a big question mark now.
Well, it is, hits and misses all the time, right? That's the nature of the business, isn't it? You never know which one is going to work for multiplexes the next. The last stock on a watch list is Godrej Consumer. Now, the stock has been a laggard in the FMCG space for most of this year, but over the last couple of months, again, there seems to be some change in investor attitude. We are seeing some nascent signs of bargain buying, I would say. Now, the quarterly numbers were just about decent. India business was under pressure, but the company is hopeful of volumes picking up in the current year. But most importantly, these overseas arms, with the exception of Indonesia, be it Africa, US, or the Middle East and Latin America, all have put in decent performance, and this trend is expected to continue. Also, the company has said that the second half of this year onwards, it's likely to see some improvement in its Indonesian business as well, which has been the major laggard. And lastly, Morgan Stanley has given a double upgrade to the stock. So I think
that probably explains your recent bounce back in the stock. I think probably, a lot of the buying in the stock is largely based on the view that valuations have become quite cheaper for the company. Let's not forget that last year, Godrej had almost a very sharp rally following the appointment of the new CEO. For me, Santo, I think the weakness in the India business is something that is of concerning. If you look at the volume performance, overall, of course, volumes were down about 5%, but the India business volumes were down about 6% in the June quarter. And I think that weakness is likely to sustain in the going quarter as well. Why? Because see, in the home insecticides segment, of course, Godrej suffers from the reopening of the economy. A lot of people are now no longer spending that much time at home, so therefore demand for those sort of products probably comes down a little bit. We'll have to see how much of the normalization hit the segment takes. But this is one space that probably will remain weak in the Q2. Apart from that, of course, margins is something that the view is that it will improve for the entire FMCG pack, probably from Q3 onwards. But I think Godrej will probably still suffer a little bit in Q2 because year ago quarter, commodity prices were still quite elevated. And overall, I think they're also trying to invest a lot in their brands. So their marketing expenditure probably would be much higher than FMCG companies out there. So that itself could also have some bit of impact on margins. And I think the last point for me is, and which is also the key point right now for the market, is that the new CEO now has to start delivering, or the market will start getting skeptical, because it's almost about to be a year and we have still not seen any sort of a meaningful turn in the business fundamentals of the company. If that starts faltering, then the entire 20 to 40% rally that we had seen last year in the stock post the appointment of the new CEO that could start coming into question.
Well, this is a super tanker, CJ. It takes some time to turn. You just can't move in there.
I mean, come on.
Turn
It's
a
not,
few levers
it's not
and get
as
the
big
ship
as
to turn.
it's not as big as Unilever, right? It's not as big as HUL or Tata Consumer. It's still a very, it's still a more of a startup sort of a company within the FMCG pack.
Well,
than
that
some of
said,
the
they're
bigger
still
ones out there.
battling macro headwinds. Let's
That
not
is true.
forget
That is true. Of course, you have to give that caveat to the company.
Well, so what are we looking forward to, CJ?
Well, there are a few, economic events coming up, Santo. Later tonight, the FOMC, the latest Fed monetary policy meetings minutes will be coming out. So that will be very crucial in terms of forming, rate hike expectations going forward. Apart from that, of course, the US July retail sales data will also be due this evening. Another very key data point ahead of the next policy meeting of the Fed. So two important, economic data points coming out in the US and probably will shape how the rest of the week pans out.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do share your comments in the feedback section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m.